Kia ora. Good afternoon, everyone, and thank you for joining this second of an XRB Need to Know series. Today we're focused on public benefit entities, which is very exciting. As we know, there's a wide range of public benefit entities across the public sector, whole of government, local council, and then moving down into our private not-for-profit entities, which come in all sizes and ranges. So I thought before we launch into the webinar, which will be fairly fast-paced, and our objective is to give you an overview, an awareness, an understanding of everything that's happening across the PBE sector. It is useful to touch on what do we mean by public benefit entities. It's a term we use all the time, or even worse, we use acronyms, PBEs. What do we actually mean? And for me, it's entities that have been primarily established to deliver goods or services for communities. And they've been established primarily to advance the well-being of communities across Aotearoa, New Zealand. So of course, XRB, I say of course because it comes natural to me, we're extremely passionate about the sector. All the work that PBEs in the public sector and not-for-profits do every day to advance the well-being of New Zealanders is amazing. So our goal in external reporting is to support that through financial statements. Why do you need financial statements? Because you need that trust and confidence in the communities. You need trust and confidence to keep getting those fundings through grants and donations. And of course, in the public sector, there's a huge expectation around reporting on the use of taxpayer funds. So that trust and confidence in this sector is vital. So from my perspective and the XRB, all PBEs are publicly accountable. So there is expectations around reporting because they're getting funding from the public. So they do need to explain how they're using that funding to advance in the best way those objectives in looking after the communities. So we'll just click through. Presentation overview today, again, you're fast-paced, but we're going to try and give you an overview of everything that's going on. We will talk about the current environment. That talks about some of the drivers of why do we have changes coming through in reporting for PBEs, and there is a number of changes coming through. I'll touch on changes to legislation, just highlighting the XRB is not responsible for legislation. We don't seek to influence legislation. Of course, we put input into it and we will comment on it, but the government decides entities' reporting requirements, not the XRB. The government will decide who has to report, then the XRB will develop the appropriate standards for those entities caught by legislation. But of course, there's changes there useful to talk about. Then we'll get into the bread and butter of the XRB, the accounting standards. Talk about newest accounting standards being recently issued, new accounting standards open for comment, and some of the ongoing projects which you'll need to be aware of that are coming through in the next few years, because they are wide scope and you may need to start considering about them now to start preparing. And then I will be very focused on time, make sure we've got availability for questions, which will be really important. So just on that note, as we work through the presentation, very happy and encourage you to use the chat function down the bottom or the Q&A function. We will monitor that as we go and come back at the end and respond to questions of particular interest. Also noting housekeeping, that the slides will be made available afterwards. This session is getting recorded, so the slides and the recording will be shared with all participants. Cool, so we'll crack on. So we've just got our vision here, the XRB. When I translate this into PBEs, it's about making sure we're developing standards that promote reporting, that promotes the best allocation of resources. So encouraging entities to use that public funding in the best way possible to support their charitable objectives. And that's obviously really important, and to encourage and challenge boards to be asking the right questions about what their activities should be, and again, how they use that funding they've received from the public. So we'll carry on. Cool. So purposely haven't done introductions, but I see from participants lots of names that I recognise. But my name is Anthony Heffernan, Director of Accounting Standards at the External Reporting Board. So we're only one part of the External Reporting Board. We've got audit teams, we've got climate teams, and we are taking very much an integrated approach, and we're working closely with those teams. But today we're focused on accounting. The accounting team reports to the New Zealand Accounting Standards Board, who is responsible for issuing standards that you need to follow when you prepare your financial statements. Joined by Karis Halliday, recently joined us, and Technical Director at the External Reporting Board. So fantastic to have Karis, and going to be pulling her in for some items when we get into some of the technical aspects of recent pronouncements. So great to have Karis on board. So we'll keep moving on. So just want to provide an overview of the standard setting environment. This snapshot here is hopefully not new to people, that we do have a multi-sector approach in New Zealand. If you joined the XRB webinar yesterday, we talked about for-profit entities and all the changes there, and that recording's available. But today we're focused on PBEs. In the top tier, for tier 1 and tier 2, we are basing our standards, and underline the word basing them, on international standards issued by the International Public Sector Accounting Standards Board. But why I highlight basing it on is if we don't like something from the IPSASB, we don't fully support it because it doesn't meet the needs of New Zealand, then we will do something different. We will make amendments. In extreme cases, we could decide no, an international standard isn't appropriate for New Zealand, and we'll do something domestically, probably still referring to that international standard, but we will do something ourselves. Completely different from IFRS, where we're very important that we remain aligned with IFRS. IPSAS and international approach for PBE, we've got a lot more flexibility. Why do I highlight that? Because in New Zealand, the XRB, we will issue those international consultations for comment. It's really important that we get your feedback on them, so we can make sure we know what the New Zealand issues are and what we need to do to make sure our New Zealand PBE standards work for New Zealand. So those consultations we do are vital, because we're very focused on making these standards work for New Zealand and work for not-for-profits and public sector at the same time. So we'll move on. Just highlighting quick snapshot. Again, this shouldn't be new. And this one slide here, when I attend universities, I'm talking about this for an hour when you get into the small print. But at a high level, it should be fairly straightforward. And the main message is it hasn't changed, that for PBEs, we've got 4 tiers, primarily based on your annual expenditure. And of course, you can move between tiers and you can go as high as you like. The one change, headline news from previous years, is that tier 4 has changed the size criteria through inflation adjustments. Changed from 125,000 lifted up to 140,000, allowing more entities to report under tier 4. Cool. So that's only change in the tier framework, but we talk a lot about the tiers as we go through, so it's useful to bring this up briefly. Cool. So we'll move on. Cool. So it feels like I've done quite a bit of talking. I'll start high level, and then we're going to moving into the detail very shortly. So before that, really is useful to know our audience. That might help us spend a little bit of time on different sections and speed up in others. So I will start a poll and just finding out what sector you're most interested in and what standards you're most interested in. And of course, if you're interested in everything, you can come in at the bottom option. I like it. Technology works, which is a relief to me. So everyone's coming through. Okay, so I'll end the poll there and then share results. Cool, so we're seeing a very even spread that aligns with our presentation, that we've set ourselves the challenge of trying to cover everything. So So we'll take up that challenge, and I'll keep an eye on the time. So yeah, but really good to see that interest in everything, especially Tier 3 and Tier 4. Great to see participants involved in that space. Really important. The largest number of charities in New Zealand are definitely in the Tier 3 and Tier 4 space. Cool, so move on. Again, highlight current environment, touched on much of this already, so we'll just click through. And so from public sector, yeah, I wouldn't describe this as new. It's ongoing. It's probably fair to say it's increasing. That transparency and accountability over the spending of taxpayer funding, that is continuing. The Auditor General is looking for better reporting in the space. He's recently reported on the additional initiatives around COVID money that was given out by the government to support us during those lockdowns. So he's looking for better reporting around that. Auditor General is definitely looking for better reporting around service performance reporting, and the expectation that all public sector entities, organisations will report on what difference they've made, what impact they've made through the use of taxpayer monies to meet their public sector objectives. Not-for-profits, high level, what are we seeing? That large not-for-profits are under increased scrutiny. You only need to watch the media, and a lot of reports around not-for-profits, definitely a focus at the moment, because they are receiving funding from the public through donations and grants. So that's only fair, but we need to balance it. We want to also support charities because, as I said, they're doing amazing things. So that's the large ones. And for smaller ones, we are hearing the noise, the messages loud and clear that many of them are struggling with the current compliance obligations. Smaller charities are looked after by volunteers. So meeting standards and following things issued by the XRB, that sounds a bit scary. I can appreciate that. So we've been working hard to simplify and improve the requirements around Tier 3 and Tier 4. That's where you can see coming on the left, right, we've got a new standard for public sector and charities, not-for-profits on service performance. We will talk about headline news, new leasing standard, so that's coming, don't worry, we're covered by this presentation. And then the IPSASB has got major projects going on that are broad and wide and will have significant impact, but potentially they're 3 or 4 years away from when they become effective in New Zealand. And of course, as I said, we'll consider that New Zealand question around whether we adopt the new IPSASB standards. There are projects on revenue, expenses, measurement, how should you measure public sector assets, and concessionary leases, big topic. So that's some of the, maybe the appetizers for what's coming up on the high level. Cool, so we'll click through. Oh, sorry, this is what I would describe as the elephant in the room. It's kind of there at the back saying, I'm here, and we're saying, yep, we know you're there. And that's around sustainability reporting. So the XRB has issued exposure drafts on climate, and then they'll be moving into sustainability for for-profit entities. The XRB is focused on for-profit entities for a start. Highlight that, for a start. The questions around should we have sustainability, climate, ESG standards for the public sector and for not-for-profits is a question we'll be addressing shortly. And it is on the radar, and rest assured that will be coming, but it will require a significant amount of consultation. Very different about thinking about the user needs for public sector and not-for-profits in this area of sustainability. So we will be very much focused on what information does the public want around the impact that these entities are having on the climate and broader sustainability issues. So it's there. We're not ready to talk about it yet, but definitely on our radar. So thank you. Cool. So legislation changes is 2 pieces of legislation have come through, and one is the Charities Act, not finalised yet. Expecting that to come through government later this year. Extensive consultation on this already. So the headline news is that the Minister, if you've followed it, has been very clear that she would like to and wants to reduce the reporting requirements for very small charities, very supportive of the volunteers in that sector and wanting to support them. And the XRB has been working hard to support the Minister on that and reducing the reporting requirements. You'll note, if you've been following, maybe the headline news is that the reduced requirements has talked about exemptions from reporting. The legislation is providing the DIA Chief Executive with the power to exempt small charities from following XRB standards. Underline the word power. The DIA Chief Executive will be following closely our standards and whether they're fit for purpose, and whether the costs versus the benefit of applying our standards is, if that's been balanced up. If it's not, the DIA Chief Executive will come in and consider using that power and exempt small charities. But it's underlying that's a power, and we're working hard to make sure our standards are appropriate for small charities, and we are reducing and simplifying them to make it easier for small charities. So that power has not been used yet, and it's just a future power that can be used if that DIA Chief Executive chooses to. So new legislation expected later in the year. Cool, move on. The next big change is incorporated societies. So both these pieces of legislation reforms are covering a lot more than just financial reporting. They're covering everything around how incorporated societies and charities operate and how their boards should be set up and appeal processes. But obviously today I'm talking about financial reporting, which is a key aspect. So incorporated societies has been passed, done and dusted. We've got new legislation issued in April, and that introduced for the first time requirements for incorporated societies to prepare financial statements in accordance with standards issued by the XRB. But there is an exemption, and that has been put in there, and that's for small. If you're small, no requirement to follow our standards. You can keep doing what you've been doing for many years and following your own accounting requirements that you set yourself. So you can see on the slide the definition of small, less than $50,000 operating payments. MB is currently working through regulations at the moment that have not been finalised to clarify what do we mean by operating payments, what do we mean by current assets, and to provide definitions around them. So those regulations will be issued for consultation shortly. But these are your headline news, new requirements for incorporated societies. So we'll click through. Just highlighting here that if you're an incorporated society and you're a registered charity, no change. You've already got reporting requirements under the Charities Act, so no change there. If you're a small, 9,500 approximately, no requirement to follow XRB standards, but of course you may choose to, including Tier 4, which is a cash standard. Or you can follow minimum requirements that will be set in legislation, which is about 5 or 6 lines of requirements. And then there'll be 6,500 approximately of entities that will be, in principle, applying our standards for the first time. Why I say in principle is that I assume that many of those 6,500 are already choosing to use our standards, because XRB standards are generally accepted accounting practice. Cool, I'll move on. Here's your time frame for incorporated societies. Just click again. And there is an XRB webinar jointly with MB coming up. These slides will be made available afterwards with the links, where we will be talking about these changes for incorporated societies over an hour. So obviously a lot more detail, and we can talk about the transition process. We will talk about the transition process during that webinar. Obviously there's a few years to prepare for it. But if you haven't been following our standards before, depending on your size and your nature, this could be quite a bit of work. Through. Okay, so new PBE standards. So now we're thinking about what do I need to know, Anthony, when I prepare my financial statements, annual financial statements, either this year or next year. So I'm talking about the new standards that have come in effective for 1 January 2022. So hitting if your first year end's been December, then March, June 2023. So hopefully it should not be new to you, and I know Everyone's been talking about it, and the auditors have definitely been highlighting it as a new standard for Tier 1 and Tier 2 on service performance reporting. There's also a new standard on financial instruments. So we'll click through. And yeah, we've got a new standard on insurance for those limited number of PBEs that are involved in the insurance space. But if anyone that calls an insurance entity, yep, absolutely, you'll need to look at this new standard. Let's go through. Cool. I don't want to spend time today talking about financial instruments, but letting you know that we have issued guidance material that's focused on those non-complex financial instruments. The most important thing for you to know, and I remember when I started my career, I thought financial instruments, that sounds scary and complex, and we're talking about hedging instruments and interest rate swaps. Financial instruments includes your bank accounts, it includes your term deposits, it includes your accounts receivable, it includes your accounts payable. Everybody has financial instruments. So those entities that are not getting involved in those complex stuff that will require a bit more thought, we've issued this guidance material to let you know what you need to think about if you have just got bank accounts and accounts receivable and payables. Suggest you have a 5-minute read of this guidance material, and it'll give you the highlights of what you need to think about. So not significant change for those types of entities, but of course there is some small print, and it does depend on your circumstances. So I would highly encourage you to have a look at this if you have not already. Public sector, whole of government have already adopted the standard early. So public sector are mostly ahead of the game on this one. So we'll move through. Service performance reporting. Easily one slide here, which we could talk about for an hour, and we have got separate presentations on our website and additional support material. All about non-financial information for Tier 1 and Tier 2 across both sectors, and effective 1 January 2022. We deferred it for COVID, so it does feel like, at least for me, that we've been talking about this for a while, but now is the time, should have really been last year, to get into it and get prepared. Why? Is it because it requires comparatives? Because this is gathering new types of information, if you haven't done this before, around explaining why your entity exists, what you're hoping to achieve. So when I go back to my opening comments about servicing the community, and your not-for-profit and public sector objectives. So it's explaining that, which of course the public sector have been doing for years. For Tier 1 and Tier 2 charities, maybe new, but you'll have this information available. It's the type of thing you'll already be reporting, hopefully in your annual report, to explain to your members what you're doing and what you've done in the year. Now you've got a standard, so you need to be following the requirements of that standard. The most important, almost significant challenge is the selection of information. How do you select the most relevant and important information for your users? That requires judgment, that requires talking to your auditors. We are very clear, and the standard's very clear, that we do not expect you to report on everything you've done. It's the most important information so the users can understand what you're about and what you're achieving, and what you've achieved through that funding from the public. Cool. So we'll move on, and yeah, highlighting guidance material. We've got summarized guidance material. We've got a larger document that's got lots of examples for you to think through and work through if you're just starting this process. In my experience, I've been very pleased so far to see many entities have been actively engaging in this and talking to their boards, talking to their members, talking to their funders, because this is all about telling your story. And it is all about maintaining that trust and confidence to keep securing that funding and make sure your charity is using your resources in the best way possible to achieve the best possible outcomes, because you're trying to help those most in need in our community. Cool. Move on. Cool. Proposals open for comment, and let's go to the next slide. And yeah, so now done quite a bit of talking. I'm going to hand across to Karis to talk about two recent pronouncements that are open for comment impacting PBEs.
Thanks, Anthony. So this proposal is all about enhanced disclosure by entities of the fees they've paid to the audit or review firm to improve consistency and the transparency of information disclosed. For simplicity, I'm just going to refer to audit firms from here, but do keep in mind that what I'm saying about audit firms applies equally to reviews. To the extent to which an entity pays its audit firm for other services is often seen as being a key indicator of a possible threat to the auditor's independence. It's important to remember that's just one indicator. There are, of course, lots of other factors to consider. However, by making this information available, it will provide users of general purpose financial statements with really useful information to assess the extent to which these non-audit services have been provided by their entity's audit firm. It may also promote increased board discussions about auditor independence. It is important to know that the proposed disclosures don't say what types of services an auditor can or can't provide. They simply require disclosures about what services were provided. Ultimately, those charged with governance have a primary responsibility for assessing auditor independence. And of course, auditors are required to consider applicable professional or ethical standards when they're accepting assurance engagements, and that's going to take independence considerations into account. So the proposal is introducing categories. You'll essentially put each lot of fees relating to services provided by the audit firm into buckets. And those buckets are, firstly, audit or review of the financial statements. It's generally well understood what sorts of fees these would encompass. And then secondly, there'd be audit or review related services. So these are services that are closely related to the work performed as part of the financial statement audit engagement, or services where it's reasonable to expect that the services would be carried out by the entity's auditor or reviewer. So that might be audit services relating to compliance with banking covenants. Then there's other assurance services. So these don't rely significantly on synergies and knowledge from the financial report audit. Example of that might be an assurance engagement on greenhouse gas statements. Then we've got tax services. So this is non-audit, non-assurance services relating to tax. And then finally, other services. So it's anything not caught above. An example of that might be legal services. For these last two, the tax services and the other services, Tier 1 entities also have to disclose what mitigating factors they've put in place for possible threats to auditor independence. So under each category, you'll provide a description of the type of service received and then the corresponding fees incurred. The nature of having categories will mean that there's a level of judgment that needs to be applied to determine which fees go in which categories. And we're really trying to make this as clear as possible in the exposure draft. But we'd love your feedback on whether you think it's clear, whether the examples are sufficient, or whether you've got other examples that you think we should consider. So with that said, if this one applies to you as a Tier 1 or Tier 2 entity, please have a look at the exposure draft in the accompanying consultation document and send us any of your comments by end of September. So next, we're going to be talking about a potential new lease accounting standard for Tier 1 and Tier 2s. A new international public sector standard was issued in January this year on leases, and it's substantially aligned with IFRS 16, which is the for-profit lease standard, which was introduced a couple of years ago. The proposed new PBE lease standard for New Zealand is aligned with both that international public sector standard and IFRS 16. The main concepts in it are that for lessees, you'll bring nearly all of your leases onto your balance sheet, and you'll do this by recognising a right of use asset, which reflects your ongoing right to use the leased asset for the period of the lease. And then you'll also record a liability reflecting your obligation to pay for the use of that leased asset. For lessors, the proposed accounting is substantially unchanged from current requirements. We've previously sought feedback in New Zealand on these concepts for the public sector, and we've received broad support, with the exception of a few concerns that were raised about concessionary leases. So if you were one of the people with those concerns, you'll be pleased to know that in this proposal, there is no requirement to fair value concessionary leases. But do be aware that the IPSASB is currently working on a separate project looking into concessionary leases and also other arrangements that look and feel like a lease, but they wouldn't meet the current definition, like a lease for no payment. We're closely following that project, and when it comes to a conclusion, we'll then be looking into what, if anything, we'll do in New Zealand for these sorts of leases and concessionary leases. In terms of timing, we're expecting to issue the New Zealand exposure draft and the accompanying consultation document later this month, and that will then be open for comment until late November. Then in the first part of next year, we'll be working through the feedback received with a view to having a final standard issued in April. There'll be a really long lead time on the effective date, which is 1st of Jan 2027. And then during this time, we expect that the IPSASB will have completed its deliberations on concessionary leases and other lease-like arrangements, and then we'll have had time to work through if there will be implications for New Zealand. This long lead time gives you plenty of time to prepare ahead of the standard coming into effect, and that's great. Depending on the nature and extent of your leases, you'll need that time to gather the information and prepare for implementation. So that was a super quick overview of the proposed new leasing standard. There is a lot to think about here, and so we will be running a webinar just dedicated to this topic in the coming months, which will help you get across the proposals. We've also got proposals open for comment for Tier 3 and 4 entities, which Anthony is going to take us through.
Hi. Thank you, Karis. That was perfect, and yeah, really keen to get feedback on those consultations that are currently open for comment. An extremely important consultation that we issued in May this year, closing for comment end of September, is proposals to simplify, improve the Tier 3 and Tier 4 standards used in both the public sector and the not-for-profit sector. So those entities with annual expenditure less than $2 million. We did hear, as I've alluded to at the start, quite loudly from some that, especially in the Tier 4 space, that they are struggling to at times comply with the standards as they are currently existing. And that's understandable. Tier 4 has a large number of volunteers looking after their accounts. You get onto a board as a treasurer, sometimes you're the last person into the room and suddenly you've got the job and you're picking up these new requirements. They're a bit scary. Why is it scary? Is because we always hear from not-for-profits, they want to do the right thing. They're really focused on doing the right thing and not getting it wrong. That can be hard for accounting because there's a lot of judgment required. Different ways you can do things, and it's not always a right or wrong way. So what we've done is we've issued for consultation these two new standards, amending the existing ones. And if we just click through, in Tier 3, so those medium-sized not-for-profit entities, the story was different depending on whether you're Tier 3 or Tier 4. Tier 4, the clear message was we want less. Tier 3 was we want more. We want more guidance, we want more options. There's different types of transactions which we'd ideally like some accounting standards guidance or requirements on. So very different stories. So for Tier 3, the highlights, and that when you press through to the link, it will take you through to our website that has got deep dive sessions. We were talking about each of these for an hour, so I'm trying to cover it in 2 minutes. So those deep dives in Tier 3 and Tier 4, highly encourage you to watch them. But the headline news for Tier 3 is we're proposing a new revenue recognition model that will allow more flexibility to defer revenue recognition. So it's all based on whether there is an external expectation about how you use funding. So if someone gives you a grant, someone gives you a donation, and there's a documented external expectation about how you will use it, you can then defer, or we're proposing that you can then defer revenue recognition until you've satisfied that external expectation. So that is softer than what we've got at the moment, and will allow for greater deferral. But always a hot topic, and we welcome feedback on that. We got feedback that entities wanted requirements within Tier 3 of how to revalue assets. If they want to revalue land and buildings, that the requirements be in the Tier 3 standard itself. Currently, Tier 3 allows you to do that, but it requires you to opt up into Tier 2. So it's like, oh, wait a minute, Tier 2, that sounds a bit scary, but I want a fair value. Can we make it simpler? And we have. That's the proposal. Instead of going to Tier 2, we've introduced simple requirements within the standard itself if you choose to revalue your land and buildings or anything else that you might want to revalue. But of course, that cost option is still there. We have done quite a bit of work on the minimum categories of how you report your revenue and expenses, and quite a bit of consultation on that before we issue these proposals, but very open to feedback on that. And that's really about meeting user needs. Tier 4, so we have simplified, reduced, looked to take out technical language and really pushed ourselves hard to make it simpler than it was. It already was quite simple in our eyes, but we've taken that feedback and made a huge leap forward to make Tier 4, in my view, easier to follow. So headline news: reduced requirements for small entities. So within the Tier 4 standard itself, if you're small, there's a whole lot of requirements that will have X's next to it that you're not required to comply with. What is small? We'll try to keep it simple, and it's whether you've got total expenditure or total payments, because Tier 4 is a cash standard, total payments less than $10,000 in your reporting period. So it's no more than that. I haven't got 3 lots of tests you go through. One test is your total payments less than $10,000. Then you're small, then you'll have reduced reporting requirements within Tier 4. So we're very much responding to the feedback that we received and the feedback that was received through responses to the Charities Act review. So we've reduced the standard 32 to 17 pages, again, to make it really simple, and gone with really, these are your minimum requirements to comply. Before, we had a larger standard that had a whole lot of optional information that you may choose to do. Of course, that was increasing the size. That was probably confusing those volunteers, saying, well, what does optional mean? Do I have to do it or not? So we've been very clear, this is what's required. And that optional information for people that want to do more, we've moved that to the guidance material. So it still is available, that optional additional disclosures if you want to provide more information to your users in Tier 4. But we're very clear now, I feel, on the minimum requirements. We've got a new reporting template. It's another key feature of the Tier 4, that we've got a standard, we've got guidance, and we've also got a template. And many entities, I know, just jump straight into the template and complete that. And that makes sense, and I encourage that, because if you can complete the template without reading the standard, why not? So the template, we've simplified, again, we've reduced to make it easier. It was about 14 pages, which again was looking daunting, but it's because we try to include all this optional information. We're trying to suit everyone. So we've gone down to 3 pages, gone with minimum requirements. And again, if you want to do more, the larger template will be available. So quite a bit of work in that space, but the proposals are open for comment, and we're very keen for feedback. And we've already received a large amount of feedback, which is really useful to refine what we've done. Overall, received great support for what we've done, but yeah, very open to refining it and making it even better before we issue final standards and requirements moving forward. Cool. Okay, so we'll move forward, but that has been a really important piece of work. Let's keep it on time. We're doing okay. Projects on the horizon. So we've talked about new standards. We've talked about standards open for comment. Now we're into those international standards, which of course New Zealand, the XRB is looking to influence to make sure those international standards are the best possible, so we can adopt them in New Zealand with minimum amendments. And as I said at the start, if we're not happy, we won't adopt them, but we work really hard because international alignment is important and useful. We have New Zealanders represented on the International Public Sector Accounting Standards Board. We have got a member, Todd Beadsworth. So we're there at the table, banging it to try and get the best outcomes possible. So just highlighting a few of these just for your information and awareness. And you may have heard about them before and you're thinking, oh, when are these going to come through? When do I need to start thinking and maybe worrying about it? So first of all, the IPSASB has issued a consultation on sustainability reporting, as I described as the elephant in the room. Where are we heading in that space from the public sector? And this CP by the IPSASB is all about, is the IPSASB the best organisation globally to develop sustainability standards for governments around the world? So they've asked that question very openly. And if the response is yes, then the next question is, are you, and by that I mean governments and other agencies around the world, prepared to fund it? Because of course this costs money to prepare new standards. So very, very early days for the IPSASB deciding whether this is a good idea for them to get into, and can they get appropriate resources to do this properly. Of course, we've got a significant number of frameworks on the for-profit side on sustainability. We've got a new international board, the International Sustainability Standards Board, focused on for-profit corporate entities. So the key question is, what extent should that be different for public sector? And I think that's a really important question, and I feel personally that should be very different. Personal views, but that requires a lot of consultation. How different should this type of reporting be for the public sector? And then it will eventually, it might take a little bit longer, but it will eventually come down to our not-for-profits. But I would suggest crystal ball that it'll be the larger ones, not so much in the smaller ones around sustainability reporting and the impact you're having on climate and the impact that climate is having on you. So my message, as I said at the start, is coming, but yeah, early days for public sector. But of course, I think it's really important to highlight for the public sector that they're already doing amazing things. You pick up the financial statements of the New Zealand government, you pick up the financial statements of the particularly local councils, and they're already talking about this kind of stuff without the need for standards. So a key question for the XRB and internationally is, to what extent do we need standardised requirements in this space? What do the public need in terms of consistent reporting on sustainability? Lots of questions. Revenue and transfer expenses, for me, have been down for a little while. We've been talking about this for a long time. And the IPSASB is getting to a place where they're close to making final decisions. They did issue EDs 2 years ago, 2.5 years ago, ED 70 to 72, received significant feedback on the recognition of revenue, the recognition of expenses, and they've deliberated on that, and they're looking towards issuing final standards in December. They'll approve final standards, and then they have to ask themselves the question, has it significantly changed from the EDs that were exposure drafts that were issued 2.5 years ago? And if they have, then they have to re-expose. The IPSASB chair has already indicated that what their final decisions are significantly different from what they proposed a couple of years ago. So it will be very likely that they'll need to re-expose, and we'll be consulting on that in New Zealand, obviously. It's a really important topic around when do you recognise revenue. And it goes into things like lumpy grants and can I recognise revenue over time as I spend it? And under what circumstances can I recognise revenue over time? Important questions. Concessionary leases, we've touched on that. So the leases project, they're broken up into 2 parts. They've issued, as Karis talked about, a new standard aligned with IFRS 16 for your standard types of leases, commercial-like leases. And we've got an ED open for comment, coming out for comment in the next couple of weeks to bring that into New Zealand. Stage 1, standard leases. Stage 2, what the IPSASB have said, let's take more time because they got mixed feedback on it, extremely mixed, is what do we do around concessionary leases? Do we, and when I say we, I mean the IPSASB, does the IPSASB require concessionary leases to be measured at fair value? We've talked to many PPEs around New Zealand, and there's thousands of things around a whole lot of different natures. We quite often call them peppercorn leases. Sometimes you've got leases for nil consideration. Sometimes you've got leases for $1. Sometimes you might have leased for a large amount, but it has been discounted. So how should we account for these types of concessionary leases? Lots of questions that the IPSASB is working through, but we are expecting an ED that we'll consult on in New Zealand in the new year, 2023. Expect an ED to be approved in December. So definitely watch the space, but maybe it's a bit of a sigh of relief. It's still going to be a few years away until reporting entities need to think about concessionary leases. Last project, and each of these we could talk about an hour separately, but last project on measurement, public sector measurement, and really the genesis of that is IFRS 13, a new standard that's been around for a little while in for-profits around fair value. So if you're going to measure an asset at a revalued amount for for-profit entities, you're required to measure it at fair value. And there's a significant amount of guidance and requirements around that in IFRS 13 for our companies and our corporates. So what extent should a fair value approach be applied for public sector entities? And the key thing is that fair value is an exit value, is what you can sell an asset for. And in the public sector, most of the time, well, predominantly you're holding assets not for future economic benefits in terms of sale or from capital gains. That's not the reason you're holding an asset. You're holding it to deliver public services. That can be either through health, hospital, or through education, schools. So how should you value that asset? And you talk, when we get into discussions around not its financial value, but its service potential. And there's certain people, I could talk about it for an hour. There's people that could talk about this for days. And it's been a topic that's been going around for a long time. So the IPSASB are getting closer to finalising their views on that, and expecting a new standard, because there was an exposure draft issued last year, expecting a new standard in December. Haven't had any indication from the IPSASB chair whether that would require re-exposure. My crystal ball is no, that we will have a new standard in December issued. And then of course in New Zealand we'll consider XRB very carefully, what we do around that and the amendments we need to make it applicable, not applicable, make sure it's appropriate for New Zealand. Cool. So that's a snapshot of the future and current projects. So they haven't disappeared, they're still coming through, and they're major and they are significant and important. Cool, I'll move on. Okay, so with that, we've come to the end of the formal part of the presentation, but we've got a few things to work through. And we've sped through, and again, the objective was to provide awareness, an overview, quite like the term Karis used yesterday, helicopter view. So, and this is us starting to get into this webinar space in our Need to Know series, and we're very keen for it to continue. So this poll here is to understand what you'd like to see in the future, whether we've got the balance right today or whether you'd really like us to get into more detail on certain things. So let's bring up the poll. Okay, so interesting. Everyone's coming through, which is great. I'll just okay, I think we're good. So share results. Yeah, so this is really useful for us going forward. There is that desire for the general overview, the headlines of things that you need to think about for that general awareness. Yeah, I agree, that is really useful. But we're seeing comments coming through from, yeah, generally broad across everything. So that's fantastic. There will be another post survey issued the closing of this webinar where you will be able to provide specific feedback. So we're very encourage that, really keen to get feedback on this, make sure it's we can get the best product possible going forward. So thanks for that feedback. Okay, so now we've done, I think, extremely well given the amount of content. We've got 8 minutes left to cover any questions. So I've seen a couple come through, but now it's that opportunity to raise any other questions, and really encourage that, because most of the time the questions are something we've skimmed over quickly, or we haven't addressed, something we've missed. So yeah, very open to those questions.
It's great seeing the questions coming through. So the first one came through when we were talking about recent regulatory developments with the Charities Act review. And the question is, what's the benchmark for small charities? Is there a threshold as such, Anthony?
Yeah, so it can get confusing because there's different benchmarks for registered charities, Charities Act versus incorporated societies. So under the Charities Act review, when the Minister and DIA policy is considering small charities and providing that power for the DIA Chief Executive to exempt small entities, they're thinking about charities with less than $10,000 expenditure. It has got an asset measurement too, and which I can't remember now, sorry, and not having donee status.
Thanks for that. That's really useful. There's another threshold question, so we'll go there next. So while you were talking about tier 3 and 4 proposals, there was a question that came in asking, what's the definition of operating expenses rather than expenses? I think we referred at some point to the threshold being operating expenses, but I think that we're also talking about total expenses when we're thinking of the tier 3 and 4 size criteria. What's your take on that, Anthony?
Yeah, so within tier 4, where we are providing within that standard some exemptions, some relief for small entities, we've gone for total payments just to make it really easy, really simple. Because it leads to your question around operating payments. What does that actually mean? You need to go to the definition. Yeah, I'm really reluctant now because I don't want to say it wrong. So I think you do need to go to that definition.
I think in the tier 3 proposal, we've said for the purpose of applying the size criteria, you look at total expenses, and so that includes your losses and your grant expenses.
Yeah.
So there's a glossary definition section in each of the exposure drafts that you can look at for that if you want more info.
Yeah, so tier 4 is definitely operating payments. I want to say it excludes those grants that you're making, but at the same time, I want to jump into the standard to make sure I'm 100% right on that. So yeah, that definition is within XRB 1. I'm sorry, I encourage you to have a look at that.
Cool. So I've got one more question which has come in, which is there any standard that requires a not-for-profit to have a budget for the coming year and report on this budget and then get this budget audited if it's a not-for-profit that's opting to get audited?
Yeah, so the answer from a not-for-profit perspective is no requirement to report budget numbers. We have got a standard, forecast standard, where you could choose to report budget numbers and you could choose to have that audited, but definitely no requirement under our standards to include budget numbers for not-for-profit entities. A different answer for public sector entities. Public sector entities have got various requirements, not within our standards, but within legislation to report forecast information.
Thank you. So just coming back to the operating expenses. So I've opened the tier 4, and so it's for annual operating payments, it's referring to the total amount of any payments, including grant payments, other than a capital payment, which has been made by the entity during the financial year. And then it defines the capital payment as being a payment during the financial year for the purchase of a resource, an asset, which has got an expected life greater than 12 months. And so there's been a kind of a secondary question saying the person couldn't find this operating expense definition in the standards. I think it really depends whether you're tier 3 or whether you're tier 4. So if you're tier 3, you're probably not going to have this distinction, whereas if you're tier 4, you will, and so it's going to be in the glossary. If you'd like more information, you can email us with your contact details and we can pick that up with you.
Yeah. Thanks, Karis. That's perfect and aligns with my nervousness about getting it right, because I knew there was something about grants, but yeah, those grants are included. So of course, tier 4, where it talks about operating payments, your payments could include capital expenditure, so that if you're going to go out and buy a large asset, that's excluded.
So that's all the questions that have come through, which is great.
Okay, thanks for that. And yes, that comes to a formal close of our presentation webinar. Thanks very much for your attendance. It is much appreciated, and it is great to see how much interest there is in this space, because as I say, there's interest from the public, there's interest from preparers, there's a lot happening in the PBE space, but as I alluded to, really important that we maintain the trust and confidence in these entities, and that we promote transparent reporting about how they're using the funding they've received, so they continue to maintain that support from the public. So it's a space we're very excited to be involved with, and that work will continue. And of course, we're always balancing the costs and benefits. That's a challenge for us, but we're looking to balance that out in everything we do. So thanks very much. We'll close there, and I look forward to catching up with individuals in due course. Thanks for now. Bye.